Hey, it's Wednesday, October the 19th, for your nightly recap. This is my second go at this. It really helps if you have the microphone plugged into the right computer before you start taping, but you know me and technology. Anyway, our risk model, slight change today, but nothing to get excited about. There is still no reason to get out of cash. We should all be for our sector and index investors totally in cash and wait for things to determine what direction we're going to go. Are we ever going to turn around, or do we mush around like we have been, or head further south and make the wait even longer? So no real changes, as we'll see quickly in the charts. The S&P yesterday closed right at the 21-day moving average. Now is closed below it, but still above the 8, and the 8 is ticking up a little bit. So we'll see what the next couple of days bring, but not to get excited. QQQ, pretty much the same story. Except it's a green bar today because it did close very slightly above where it opened. But both the close was below yesterday's close, and today's low was below yesterday's low. So not really much going on, and the volume is still pretty light, so there's no conviction either way. The mid caps and small caps got hammered a bit today. The Qs were stronger than the SPY, and I think that's because of Netflix and released their earnings, and they were better, and the stock was up. But the small caps and mid caps got hammered by 1.75% today. So here's the IWM, and then the mid caps. So then pretty much all of these have the same pattern. So this, as you or where I was in, I'm going to take these out. Was in the triple leveraged small cap index with an add-on position after taking some really good profits on an earlier position. So I got stopped out on that and stopped out on the whole position when it went below. What's this? Monday's low. So it went below there. Recovered a little bit, but nevertheless, I was stopped out. So small loss on this position and a small gain on the remaining 1/4 of that position, which offset each other. So it's essentially break even. So what I'm looking for here, though, is I still believe that this, I'm hoping that this is going to basically, if it can hold its ground here for the next couple of days, Thursday, Friday, just sort of stay inside here. And then maybe next week, we tick back up again. So we might get an entry on this downtrend line break. I'd be looking for a move at least to the declining 50-day moving average, and then even conceivably above that up into no man's land here, somewhere between the 50 and the 200. So this one still has, in my view, some good potential if it can look like this. So this is what I'm expecting. If the train comes in on this schedule, I'll get on board. If it doesn't, I just take a pass. ELF. Again, I'm going to remove these. So it's been sitting in this, redraw that, this box for some time now. And then on Monday, broke out of the box and then ran up, and everybody got excited. And then the demand just stopped, right? And this is so typical of what's been happening the last year or so. That there, once you get to a certain level, the demand just dries right up, and so as a result, the stock just pulls back. A lot of people might have got sucked in here, and then they were looking for a quick trade, and then they had to sell, and so that causes us to go back. So I was in like way down here somewhere, 39 and change. So I've taken 3/4 of my position off at a really good profit, and I only have 1/4 left, which is a stop right below Monday's low. But if it can hold here, or even if it stops me out, this what I'm kind of looking for here is, let's say I get stopped out, but we hold in this level here and then start back up again. I'll be looking to re-enter, and I might even cheat and get a re-entry somewhere around here. And then we'll just see how it behaves once it gets back up to the top of the box. So this is going to keep a really close eye on this, whether I get stopped out or not. If I don't get stopped, then of course that means it's likely going right back up that way. So that's a decent result too. But I'm actually hoping from a setup perspective that I do get stopped out and get a chance to re-enter with a better pattern. LPLA, no real change. The pattern I drew a few days ago is coming. It's coming in on schedule. My expectation and hope is if it does this, but of course, if it goes this way, my stop is here and we're done. I did add a couple of new things today. I'm going to go XLE. Mark Minervini made a call right shortly after the open on the XLE, which is an ETF for the energy sector. He bought this break of this downtrend line. Knowing his style, he would enter here. That's with a small position, what he calls a half position. He put a stop down here, and he'll be looking to add to this position, make it a full one if it takes out this high out here. So with that in mind, I didn't take it at the beginning. And then I also looked, I thought, you know what, if I'm going to take this trade, I'm going to take it in the Canadian equivalent of this, which is the XEG. Only because Janice's account is in Canadian funds and she hasn't had she's been in cash for longer than I care to think about. So this is a decent pattern that I could trade the same instrument in Canadian funds. So anyway, we took this trade, but I waited for a little bit. I waited about a half hour and then it moved up. It settled back down, and I was actually able to get some at 15.18, and I added to the position at 15.22. So, and we've closed now at 15.60. So I'm in the money by 2.5%, which is a nice way to start a trade. It is only a half position, so I will look to add if we can get above this point up here. And of course, my stop is right underneath here at 14.80. The next one is I consider this an absolute classic pattern. I've already drawn some lines in here. So I bought this. The ideal buy of this was above this downtrend line yesterday, and I was watching it, but I did not buy it. But then today, when this stock was going up, see, it ended up today 2.5% when the market is down. I thought this is a good relative strength. I did get in at 35.80, and it had a nice close right at the top. But but it's very small size. My risk on this is like less than 0.5% of my portfolio risk. This pattern is, let's start here with the weekly. It's gone not vertical, but had a really vertical move. As you'd expect, it would settle in, absorb, the equilibrium between buyers and sellers up here. The moving average is sort of catching up. And now we're waiting for the next indication that this could rip again higher. So this almost doubled. In fact, from the lows here, it did double. So these will take a little while to settle in and then could easily double again the next little while. From a daily chart pattern, though, this is, to me, a classic. There's so many learning lessons in this one. And in fact, this is going to become part of my model book. And in my part 3 of my series of how to build and maintain a stock portfolio, when I'm talking about entries and managing risk, this will be included in some of the examples, because it is classic. So I won't spend a lot of time on it, but probably more than I would normally. After this nice move, you get a big move up on this day here on massive volume, or much bigger volume than normal. And this is really what we call an exhaustion move. So if I were long the stock, let's say I'd entered, somewhere down on that breakout for whatever reason, I'm still holding it. This would be a sign to start lightening up, because everybody that wanted to buy it has bought it. And so you can expect that demand is going to dry up. And sure enough, this is what's happened. The next day it did tick above it a bit, but then there were just no more demand and the stock started to sell off. The nice thing about it, when the sell off, the volume dried right up. It slowed right down. So there's not a whack of sellers. It's just a lack of demand. So then it turns back up again and it reaches this previous high and then gets rejected again. So this is not so much there. I mean, there's supply here, but really it's more a demand issue. The institutions are just not willing to pay more than what this is, at that time, $35.50 or so. So demand drops off. So the stock pulls back, tries again, and the buyers say, okay, I've bought enough stock. And then it falls back again. Now this bar here, it opened here, traded all the way down, and then closed right at near the high. So this is a very positive sign. Tells me the institutions are not going to let this thing go below $31. We could have figured that out like in this period here. And that's supported now by this area here. Didn't go below it, didn't go below it, and didn't go below it. And this one again was, remember last week when the market gapped way down and then ripped higher all day. This opened here, traded all the way down to here, right to that 31.50 level, and then closed right at its high. So there's obviously, when it gets in this zone here, there's a lot of buying, or a lot of people, institutions willing to buy. So again, back to here, the first attempt at this high generally doesn't work, but it's a reasonable target for a lower entry. The second one is a bit higher probability. And then sure enough, by the third attempt, or fourth attempt, I guess it is, it does take out the high. But guess what? It just doesn't last. Again, we're in an environment where the institutions are just not interested in buying a lot. So there's just not a lot of demand. If this pattern were to show up when the market is good, and we're in an uptrend, or certainly if we're in a bull market, I would be risking 2, 3, 4% of my, probably no more than 3% of my account balance. I would put at risk in a trade like this, because they have an extremely high probability of working. In this environment that we're in right now, where the market is just shit, you got an S&P that's looking like this. There's only a 50-50 probability that this stock is going to get to, oops, wrong one. This stock's going to get back to and set a new high. It's not a bad probability, but it's just not the kind of reward that I'd be willing to put a whole swack of money into. But different times, I would be all over this one. So that's it. Again, more on identifying and reading these chart patterns will come in lesson 3. So that's it for now. Keep your powder dry. This market will turn at some point. So stay safe.